Fannie Mae says home prices will not fall in the U.S. 22 million new jobless claims in the past 4 weeks. Small business loan program out of money. How can that be? A new bill calls for $2,000 a month to citizens during pandemic. UBI is closer than we think. Hey everybody, JJ here. Bull to the bust. It is Thursday, April 16th. Appreciate you joining me. Now before we get started in the news, just want to make a clarification. In our previous report, this video right here about banks bracing for huge loan losses, I had mentioned that there was no fixed dollar to oil ratio because some people are saying that the dollar is backed by oil. I made a big mistake in there. I left out only one word, but it was a big mistake because it completely changed the meaning of what I was trying to say. What I was trying to say is that there is no fixed ratio. That means the amount of money that's created is not tied to a quantity of oil having to be in reserve. So there's no fixed ratio is what I meant to say. I left out the word fixed, and that completely changed it, because if you look over at the US debt clock, there is a oil to dollar ratio. I think there's also a gold to dollar ratio too, but it's not tied to it. In other words, it's not convertible. You can't exchange a debt note or a dollar for a fixed amount of gold. The prices are always changing because they're not tied together. So thank you to the reader that pointed that out. And I'm sorry to anyone that I might have confused or caused any questions to come up. So again, I appreciate you guys being on top of that and pointing that out. Let's get into the news here today. Fannie Mae says home prices will rise in 2020 and will not fall. And that's also very interesting because this comes on the tail of that same video that we just spoke about. Whoops, I hit the upload button there. Comes on the tail of this video where we talked about home prices are likely going to fall because banks are pulling back on the lending. They're tightening the lending requirements. You have to get a higher credit score now. And many banks are requiring 20% down payment again during these times. Now, of course, that could completely change, but at this point, based on those numbers out of the banks, those requirements, combined with the massive job losses, which we're going to talk about here in a minute, we see a home price decline in the cards. Now, anything could happen. This sickness could completely go away in a few weeks. Banks could resume loaning to more subprime individuals, but the pool of buyers, in our opinion, is going to severely be impacted because of the job losses. A lot of these jobs are not going to come back. So we talked about home price declines there, and in the previous video, Housing Bubble 2.0 meets PIN. All right, so let's take a look at what Fannie Mae is projecting here. Okay, headline here, Fannie Mae home sales will decline by 15% in 2020, but what happens to property prices? So they are projecting a slowdown in the sales of homes, but not falling prices. Now, first of all, think about who this is coming from. This is coming from Fannie Mae, a government agency. I would be very surprised to ever see them forecast a price decline, because that in itself could cause panic in the housing market and actually start causing home prices to fall even faster. So I'm not surprised that they are not coming out and saying home prices are going to fall. Of course, nobody has a crystal ball, so let's take a look at their reasoning behind this. Okay, this is a Market Watch article, by the way. This article talks about home sales declining. That's pretty obvious. The people that are not looking for homes, the sellers that are pulling their home off the market because of the fear of the pandemic. But let's cut to the chase right here. What will happen to home prices? Here's the excerpt here, what they're saying. Sellers don't necessarily need to worry about lower prices if they do not put their home on the market. According to Fannie Mae is still projecting the median price of an existing home to rise to $275,000 in 2020 from $272,000 last year, while the median price for a new home is expected to increase to $326,000 from $321,000. So essentially what they're saying here is, yes, there's going to be a decline in activity, a decline in sales with everything that's happening right now. But because of the lower inventory and the sellers pulling their home off of the market, it's still going to cause a supply crunch. Therefore, home prices still rising. That's what they're saying. Now, we'll have to see how this plays out, because I think the job losses are going to be too staggering. And then you combine that with the banks. If the banks do continue to pull back on the lending and becoming more restrictive on the guidelines for someone to borrow the money to buy a home for a mortgage, those two things combined are going to be a pretty big force impacting home prices. And if you look at one of our other previous videos, I think it was maybe last week, we talked about that sellers are lowering prices already in many housing markets. So we'll have to see how this unfolds. We'll have to see who's right. Right? Again, none of this is set in stone. Anything could happen. Maybe there'll be a miracle drug that comes out. We don't know. But I thought it was interesting that they are making this forecast with home prices still increasing this year. Next headline here, 22 million job losses over the past 4 weeks. Well, we're going to tell you about why some people are calling this good news. We will look at a Politico headline right here, and this is the most recent week, bringing the total to 22 million in the past 4 weeks. Now, over the 3 weeks prior to the most recent week, or the first 3 weeks of this 4-week period that we are looking at, there were over 17 million new jobless claims filed. But some outlets are reporting this as being kind of good news, is because the rate of unemployment or jobless claims in the first 3 weeks of that 4-week period was about closer to 6 million, but now 5 million. So think about that, 22 million newly unemployed people just in a month, and home prices are still going to rise. Can you think of a more disconnected reality than the financial markets right now? Look at the stock market. We'll get a snapshot of this real quick here. The Dow Jones down 200 points today, but we have seen a pretty big recovery here over the past week or so. Even with all these newly unemployed people, record-breaking numbers, beyond Great Depression breaking numbers, but yet the stock market is still increasing. So complete disconnect. Maybe the banks will loosen up the lending. And many people are asking, why are banks tightening the lending since they have unlimited currency available? And also they're asking, why are banks increasing their reserves when the reserve requirement has been completely waived? You don't have to have any reserves now in this emergency time right now. Well, that's a good question. Maybe they are looking to create a bust. Maybe they want the market to crash. And we know that falling home prices could be a big trigger for an economic downturn. So boom and bust cycles are going to continue, in my opinion. And it doesn't mean there's not going to be hyperinflation. Ultimately, I think, yes, there will be hyperinflation. But remember, the wealthy get wealthier in boom and bust cycles. You buy low after a big sell-off or crash or decline, and you come in and buy assets and ride the wave back up into the new bull market cycle. Finally, small business loan program out of money. How can that be when they have unlimited money they can create? Well, there still is a political process to allocating these funds, even though endless, unlimited funds are able to be created. As typical, we have politicians that are slowing down or stopping more funds being allocated to this program for small businesses. And why is this important? Well, small businesses are still the heart, they are the backbone of the economy. Even though over the past few decades we have seen more and more consolidation over to large multinational corporations taking bigger and bigger portions of market share, but small businesses are still vital, especially in the United States. So let's take a look here. Headline right here out of CNBC, Small Business Rescue Loan Program hits $349 billion limit and is now out of money. What is causing this? Well, it's typical. It's politicians going back and forth on what they want and what they do not want in the bill to supply more funding to small businesses. Now, isn't it interesting that when was the last time you heard about a war that we couldn't fund because we didn't have enough money? You see, the left and the right, the false left-right paradigm, I should say, they rarely disagree on certain topics. When it comes to funding war and invading other countries and the military, a global police state, they're pretty much on the same page. But again, isn't it interesting when it comes to small businesses here in the U.S. needing help during this time, during this lockdown, which many of these businesses have to involuntarily close down. Now we're coming up with this debate on, oh, we can't pass this, we can't give them more money, there's red tape, there's a political back and forth here on funding this. And finally, UBI, Universal Basic Income, could be closer than we think. It may not be permanent, but during this time, during this quarantine lockdown, A new bill calls for $2,000 a month to citizens. So this is starting to look like better than your basic unemployment benefits. And it might be better than getting a job in some cases if you're looking at minimum wage jobs. And this is out of foxcarolina.com. New bill introduced to Congress calling for $2,000 a month sent to Americans amid pandemic. U.S. representatives on Tuesday introduced an Emergency Money for the People Act, which calls for additional cash payments for hardworking Americans who may have been impacted by the pandemic. Ryan said the CARES Act was an important first step, but he feels the one-time payment does not provide enough support for American families. The Emergency Money for People Act would include $2,000 monthly payments to every qualifying American over the age of 16 until employment returns to pre-outbreak numbers. And it's not going to be solely based on if you filed a tax return, because college students, adults with disabilities can still receive payments even if they're claimed as a dependent. So it's going to go above and beyond the $1,200 per person stimulus that some of us have already received those paychecks. And people will be able to get their money through various deposit methods, including PayPal, checking, and prepaid cash cards. So things continue to unfold into just further and further insanity, in my opinion. Please let me know what you think. The forecast out of Fannie Mae saying home prices will still increase through this time, this pandemic. The 22 million jobless claims, is that not going to have an impact on home prices? Combined with the fact that banks are pulling back and restricting lending. The small business loan program out of money, what do you think about that? And isn't it interesting that when politicians are voting on if they get a raise, we never see or hear about that particular instance, there being a lack of money. And finally, the $2,000 a month cash assistance to people, is that a good idea, or is it more of the same mess, the same thing that got it into this mess where everyone is dependent on the government? I think you know my opinion by now, but thanks for watching, everybody. I'd like to hear from you down in the comments. Appreciate all your feedback, your support. Thank you very much. Bye for now.